Hi guys, very good morning. Hope you are having a great day. The first thing we are doing today is pre-market. Guys, as we discussed, as usual, we'll go with the news today. We'll go with the pre-market updates and also yesterday's post-market. So be with us for all the whole session with us. We'll be updating you guys all the news which will be occurring today. And also which are the news which impacted on the market today. Actually, it's kind of a massive day today because we are heading into monthly derivative expiry for the June 2026 contracts. So yesterday was a absolute roller coaster. So the today is looking no different with an critical geopolitical cues and overnight shift dictating our morning setup. So let's just break down exactly what happened and where the market are heading today. We'll talk about the next yesterday's closing. Yeah, Sensex it has shed 372.10 points with 0.48% to settle at 76,728. And Nifty 50, which has slipped below the key to 24,000 mark, closing down 109.75 points with 0.46%. Actually, profit booking kicked in heavily, dragged down by auto and banking counters. Kotak Mahindra Bank was the biggest spoiler yesterday and dropping nearly 3% after news that MD and CEO Ashok Vaswani will be stepping down at the end of this December. So we also saw a notable weakness in M&M, also Maruti and also Indigo on the brighter side. So defensive like Pharma held the fort, while individual stocks like BEL and Trend showed great resilience. Despite the broad market correction yesterday, our strategy was on the spot on yesterday. So we already gave a premium alerts. We are premium groups. to our all the clients. So yeah, in Nifty options, we capitalized the downside with 24,400 PE and 24,450 PE puts, pocketing a massive 132 plus to 142 plus total points, with an overall average return of 18.5% to 20.2% gain. So yeah, what happened overnight while we slept? It's all about the geopolitical landscape and the crude oil cool down. So yeah, over the weekend, fresh military exchange between US and Iran over the Strait of Hormuz spooked global markets initially. However, overnight updates show both sides have agreed to tentative pause in to renew talks. While the interim peace agreement keeps a total market meltdown in the chart, headline risk remain incredibly very high. And due to this progress in the US and Iran peace talks, shipping through the Strait of Hormuz has accelerated, restoring a Persian Gulf exports to about 75,000 of the pre-war levels. And WTI crude fell sharply around $69 per barrel, while Brent crude is hovering firmly around $73 to $74 level. This easing oil price is a major relief for the Indian importers this morning. And also, US markets closed slightly lower ahead of key macro data, while Asian markets are opening mixed to this morning. FI outflows have softened domestically, providing a steady baseline. So yeah, the Nifty 50 it has opened with a soft, steady vibe. We are currently ticking around 23,941. It is essentially flat to yesterday's close, testing the immediate stability of the 23,900, which is actually support level. And Sensex, it's hovering around 77,005.51. The bulls are attempting to claw back of ground after yesterday's 372 point drop. And yeah, we'll talk about the bank nifty. So currently it's trading near 57,758.90. It's holding just slightly above yesterday's close, which is 57,727. Trying to stabilize after being heavily punished yesterday. So yeah, for anyone who missed yesterday's closing macro picture, let's just quickly track how we got here. We faced notable pressure across auto and banking yesterday, and Kotak Mahindra Bank took a heavy lead, sliding nearly 3%, alongside names like Mahindra and Maruti. So yeah, why is the market opening relatively stable today despite yesterday's late sell-off? It's all because the overnight news flow. Global market nerves are settling down over the US and Iran frictions near the state of Hormuz. News overnight confirms a tentative pause in hostilities to facilitate a new renewed peace negotiations. And because of this diplomatic window, shipping through the critical state of Hormuz has quickly accelerated. So Persian Gulf exports are recovering back towards 75% of their pre-war rates. As a result, WTI crude plummeted roughly $69 per barrel overnight, and giving our domestic micro setup as a massive breather on inflation and import costs. So here's the actionable playbook for the next couple of hours. Since the market opened flat and it's consolidating, do not jump into trade entire like completely bad blindly. So Nifty 50, it's respecting its 23,900 to 23,920 zone as the immediate base support. If Nifty breaks below 23,900, the put will be accelerated fast. On the flip side, we need to deceive tick over 24,000. So in the bank nifty, you should keep an eye on 57,500 as long as the bank index holds above this live threshold. Expect a premium decay to favor option sellers early on. So yeah, since it's 30th of June 2026, it's final shutdown for the June derivative contracts, and it's a monthly expiry day. Hope you guys remember this. So yeah, while the market prints its 5 minutes opening candle, it's let's just talk about why we are seeing the caution storm. Yesterday, yeah, Monday, the bears are took over the second half of the day. Nifty opened up slightly and hit an intraday high of 24,120, and then got slapped at all the way down to close at 23,946, losing about 110 points. And why you guys think it has dropped suddenly? So it was a mix of intense profit booking at psychological highs, sharp selling in auto and banking space, and a temporary spike in crude oil driven by a fresh weekend flare-ups between the US and Iran over the Strait of Hormuz. But yeah, things changed while we slept. Overnight updates show both sides have agreed to tentative pause in hostilities, although to diplomatic talks back on the table. Because of this, shipping risk decreased, and Brent crude immediately took a breather, dropping down to near $73 to $74 per barrel. This easing of oil pressure is exactly why our market didn't gap down severely today, because despite yesterday's ugly close. So we have a structural relief, but tactical expiry volatility is still very real now. So yeah, it's 9:36 a.m. The first 3 minutes, 5 minutes are like officially logged in the system. Let's map our battle lines for the next 1 hour. We can see the Nifty chart, which I already put now. The immediate intraday support is holding aggressively, and it has managed to push Nifty below for on a 15 minutes candle closing basis. So yeah, when we take geopolitical issues over the weekend, fresh military exchanges between US and Iran over the Strait of Hormuz initially spooked global financial markets. So they have had a peace talks in Doha. Because of this diplomatic breakthrough, commercial vessels are moving safely, and Persian Gulf oil exports are normalizing. It's actually result in 1% overnight fell. While lower oil prices provide massive macroeconomic relief for India, the initial headline shocks are keeping traders highly cautious. As I mentioned, it's 30 June and monthly derivative expiry day. Yesterday, we saw aggressive profit booking, dragging Nifty down by 109 points below its key daily pivot. Auto, banking, IT took a severe hits yesterday. So today's flat opening is a reflection of big institutional players squaring off their monthly positions. so leading to aggressive premium volatility. And the good news is the NSE has declared zero stocks under the F&O ban today, ensuring standard liquidity limits are open for trading. So yeah, you should keep an eye on the specific stocks because the news is actively hitting their order books. One is Kotak Mahindra Bank, which is continues to face minor pressure after the heavy news that MD and CEO Ashok Vaswani will be stepping down, and the pharma and metals sectors. As the global macro uncertainty lingers, institutional funds are physically shifting capital out of high beta and also parking it securely into defensive like pharma and metals, which are actually currently leading the positive contributions for today. So beyond individual trades, we have key macro numbers to process. So India's core domestic industrial production metrics speeded up to 5 month high of 5.1 year on year, proving that underlying corporate demands across manufacturing and electricity and also gas remains exceptionally robust. And furthermore, the Union Cabinet just greenlit a massive 30,000 crore supplementary capital deployment in the National Investment and Infrastructure Fund (NIF). This pushes the total deployment target to 60,000 crores, ensuring capital goods, also construction and cement companies, are structurally backed by government-led capital expenditure. On the regularity side, the National Stock Exchange has announced the zero individual stocks under the F&O trading ban today. And usually, when stocks cross their 95% market wide, which is position limits, they get locked up, restricting trading flexibility. Having zero stocks under the ban on a major monthly expiry day means maximum capital flexibility and absolute freedom for institutional blocks. So expect spikes to be sudden and sharp here. And also you should keep checking the data trends on yeah, commodity options. You should keep your eye on it, and because global crude is shifting down towards $70 per barrel, our raw oil option strategies are experiencing heavy value. So we are sitting right at the major inflection line. If Nifty cannot decisively crawl back and maintain stability, which is a structural zone, the short covering will morph into a deeper liquidity. Do not rush into options positions blindly while the market is deciding its macro decision. Let the midway news updates stabilize. Manage your risk parameters tightly and keep tracking the live news tickers. So yeah, it's exactly 9:44, and we are live into the herd of morning session. So let's just look why the market opened steady, but is now witnessing a continuous slide. So yeah, the Nifty 50 opened with a desperate attempt to trade higher, hitting an opening high of 24,032. But as you can see on our live terminals right now, the index has aggressively surrendered those gains, sliding nearly 75 points from its open, actively down at 23,870. And the BSE Sensex is tracking a similar pattern, slipping 141 points to over around 76,586. Yeah, this sudden downward rotation is driven by intense institutional position. Today is June 30, the final month contract expiry. So for the June derivative series, yesterday's failure for the Nifty to hold 24,000 baseline created a short-term bearish hangover. So with the India VIX jumping up 2.13% to 13.90. So this morning market volatility is actively expanding. This flat start was just an illusion before expiry day. So yeah, Nifty 50, the NSE implemented its major quarterly weight rebalancing. Coal India, ICICI Bank, HDFC Bank, and Bajaj Finance have had their index weights increased, sparking localized institutional inflows. On the flip side, Bharti Airtel, State Bank of India, and L&T Gracism, uh, Maruti Suzuki are facing a localized structural outflows as their index weights have been cut. So trading up 1.80%, the company officially announced it has bagged a massive international letter of award for a 1,000 solar photovoltaic project coupled with 600 megawatts battery storage system in Egypt, which is Sterling and Wilson Renewable Energy. And Central Bank of India trading down over 3.3% after launching its International Financial Service Center (IFSC). So, Jupiter Hotel showing flat to weak volatility following the immediate resignation announcement of a chief financial officer, Tarun Jaitley. So let's pivot to the major domestic driver that the mainstream media isn't screaming about it, but your portfolio is absolutely feeling. We are talking about regional economic data, specifically the monsoon progress and localized corporate actions, and exactly which stocks are getting hit and handed a lifetime right now. Fresh state-by-state data released morning shows that India's summer crop, Kharif, sowing its officially trailing last year's pace. A heavily delayed monsoon onset across core agriculture benefits is central and northern India. Yeah, the slow planting progress is raising immediate warning flags on Wall Street and Dalal Street regarding the rural demand, also the food inflammation and crop yields. If the rain distribution doesn't catch up in the next 2 weeks, consumer companies dependent on rural sales are going to feel a massive squeeze. However, look at the flip side of a hot, dry delay. India's industrial manufacturing and power grids have been working overtime. Driving by this regional heat wave, India's domestic electricity and gas sectors exploded with a massive 9.9% structural expansion. So it's single-handedly pushing India's overall industrial production growth to a 5-month high of 5.1%. So let's just talk about and track exactly which stocks are reacting to this regional matrix right now. The first one is Jindal, JSW Energy. With the regional power and demand surging due to the delayed rainfall, power generation plays are under heavy accumulation. So analyst Vaishali Parekh from Prabhudas Lilaldar has officially issued a hot intraday buy rating on JSW Energy, trading an immediate objective of 600 rupees with a strike surplus of 573. The second one is BPCL. Yeah, the state-run Bharat Petroleum Corporation. It is in the focus after announcing a major regional expansion. They are officially acquiring a 40% stake in Tikitar and Shell India Private Limited for 85 crore rupees. This marks BPCL's aggressive and first-time entry into India's rapidly growing value, crucial for regional road and highway infrastructure deployment. And the next one is which is corporate regional headwinds, which is S Bank and HDFC. Private banking blocks are highly active, and HDFC banks just announced their former financial services secretary Rajiv Kumar is stepping in as a part-time chairman. So, alongside as an aggressive board approval to raise 7,500 crore via eligible securities, another 8,500 crore via debt. Despite the strong corporate structural steps, regional credit growth worries are keeping these banking heavyweights highly volatile on expiry day. And this regional news flow is why the index is expiring selective sectoral churn, while the broader Nifty is sliding because of monthly contract expiry. Specific stocks backed by a regional utility. So since we are in the smart money, actually moving while the main index is acting crazy. There are some playing defense. They are fleeing high risk quarter stocks, parking their cash into boring, say safe stuff like pharma and metals, which are pretty much the only green things on my dashboard right now. Kotak Bank is also acting shaky because of their CEO stepping down this late year. And big investors hate sudden management changes, of course. So look, if you look at the premium sheets we reviewed earlier, like the massive wins we caught yesterday on Nifty and Sensex options, we did it by waiting for the market to give us a clear signal instead of just forcing it. So yeah, today is the day to protect your cash, guys, and don't just go and hero trading the mid morning chop. Let's the big funds finish fighting over their monthly contracts. Wait for the clean directional breakout, and we all strike when the odds are in our favor. And drop your stock questions in the chats. So yeah, guys, you can look closely. So you can look closely in the chart. Nifty has taken the regained the support level. There is a chance of uptrend. Just keep your eye on this and look closely. So we'll be back with the global markets updates. So in that meantime, if you have any, if you taken any trade or something, just put that particular stock name in the comments. We'll analyze it together, and we'll be back in the global market updates. Also, if we have any news update and the stock update, also the movement update. We'll be informing you guys. Just be in the session. Hi guys. So yeah, guys. As we told, we are here with global news, global market news. So yeah, we already spoke about the regional news and all, but let's look outside the India for a minute because there is a massive global shift. There is a massive global shift happening in the quietly affecting your stocks. Let's look at the tech world. Investors were starting to worry that the artificial intelligence hype was dying out, but overnight tech gains out of South Korea completely flipped the script, announcing a jaw-dropping $518 billion commitment to build the world's largest AI chip-making hub. This half $1 trillion news means single-handedly lit a fire under tech and memory stocks, which is globally, giving our local IT names something to think about. But on the other side of the coin, global central bankers are having a big summit in Europe right now, and the US Fed officials explicitly warned that even though inflation is matching expectations, it's still way too high. Uh, High interest rates are going to hang around like a high blanket to a longer people hope. This is why global markets aren't just flying into deep green territory today. So everything is and everyone is keeping their guards up for this. So knowing all this news, what is the smart money doing on your screen right now? They are playing defense. They are fleeing risky and expensive auto stocks and hiding out in safe steady sectors like pharma and healthcare, which are like practically the only bright green spots on my dashboard today. We also have some individual corporate drama. Kotak Mahindra Bank is feeling heavy because of their CEO, and big investors hate sudden management changes. On the flip side, look at the special situation. Sterling and Wilson Renewable Energy popped up over 1.5% because they just begged a uh, massive solar mega product in Egypt. So we are sitting right on the top of a major technical floor. Technical expert Vaishali Perek pointed out that the 23,850 zone is crucial support, which is line for the Nifty. As long as the Nifty stays about 23,850, the bulls are still active. If we close below that level on a 15 minutes candle, the selling will accelerate fast. So do not go blindly in the morning, mid morning expiry chop, and keep your position small, manage your risk tightly. So yeah, over in Japan, their currency, the yen, just crashed to 40-year low against the US dollar. So while this makes Japanese cars and electronics cheaper to export to the world, it is driving up their domestic inflation like crazy and forcing their government to link about a massive rescue plan. Global markets just booked their best single quarter in almost 6 years for the tech shares. Even though everyone were worried about an AI bubble popping last week, a massive explosive bounce on Wall Street chip makers completely revived the global tech rally in a single night. And also, fresh economic tracking numbers out of Beijing show that China's factory profits are staying flat. So there is no massive boom, but no scary crash either. So it is just cruising along steady, which is giving a neutral baseline to global manufacturing sectors. Also, over the Wall Street, the Dow Jones Industrial Index blasted right through its 52,000 milestone for the first time in the history, closing up 0.59%. The tech-heavy Nasdaq Composite also surged by 2%. The sheer momentum from the US market closing at the all-time high is injecting confidence into global investors. So this tells us that even though our local index is expiring some expiration per day pressure, the underlying global market structure is incredibly resilient. And yeah, we should talk about the gold and silver. On the global comex, uh, gold prices cooled down by nearly 0.72%, trading around $4,009 an ounce. So meanwhile, silver prices dipped slightly after touching its lowest point of the year in the previous session. So when safe haven assets like gold and silver ease off their peaks, it usually means big institutions are moving cash back into the stock market. So the easing of commodity pressure gives a long-term green signal to equity bulls. So about the currency, there is actually a tug of war between the currency. In the currency market, our Indian rupee edged slightly lower against the US dollar, so hovering around 94.45 rupees mark comparatively yesterday's close of 94.51. So, fluctuating currency directly affects the heavy import export sectors like IT and pharma. It explains why we are seeing selective defenses like buying in pharmaceutical companies today, while high risk sectors feel a little tight. So yeah, SpaceX just made its massive debut on the Nasdaq exchange and has already blasted past jaw-dropping uh, two $2 trillion valuation and adding fuel to the fire. The Nasdaq announced the SpaceX will officially be added to the Elite Nasdaq 100 index. So in the next week, because index tracking funds are going to be forced to buy an up millions of shares to match the adjustment. Money is aggressively buying into the space, so it is single-handedly keeping global tech sentiment incredibly hyped right now. Actually, when investors are scared, they dump stocks and run to gold and silver. The fact that previous and precious metals are falling tells us that global institutions are quietly gaining their confidence back and moving cash out of safety and back into riskier equity markets. So also tonight, Marks are a massive event for the commodities world. Commodities world, as the global quarterly agriculture and stocks report drops ahead of the release. Global wheat and grain prices have absolutely cratered and testing their multi-month lows. So just like our delayed domestic monsoon impacting local agriculture sentiment, global grains markets are experiencing heavy fund liquidation and big players squares back. It's a massive reminder that it's just not a stock traders scrambling to settle their positions on a expiry day. Also, Amazon just announced it's pumping a massive 10 billion euros, which is $10.7 billion straight into Germany to build out its cloud computing and also its AI infrastructure. So European tech demand is absolutely exploding. This massive corporate spend shows that big US tech gains are aggressively investing cash, which is globally, which is keeping the overall sentiment for global software and tech services incredibly very strong. And major electric vehicles makers like overnight announced a fresh round of massive prices cut off across Europe and Asia to clear out their rising summer inventories. While this is a great news for car buyers, it is putting a massive squeeze on profit margins for auto component suppliers and battery manufacturers who are worldwide. So it helps explain why our local auto sectors have been like feeling a bit sluggish over the last couple of like days. So also even with the temporary maritime peace talks, we discussed global ocean freight container rates are just ticked up to their highest levels of the year due to the massive port congestion in Asia. Higher shipping costs mean it costs more to move goods around the world. So keep an eye on your logistics and export heavy stocks today, as they might see some sudden volume action. So the global cash flow are moving fast. Amazon is also dropping 10 billion euros into Germany for their cloud tech, but also the AI infrastructure. But at the same time, global shipping rates are spiking due to the port backlogs in the Asia. So the world is adjusting to a lot of moving parts today. Just stay calm, let the expiry noise pass, and stick to the levels we have been tracking in our reports every day to our clients. As I mentioned, if you look at the macro picture, it is absolute wild day globally. So SpaceX is, which is actually officially announced, it's a $2 trillion beast, and it's forcing global funds to rearrange their tech portfolio. So meanwhile, gold is backing off, and global commodities are flushing out their positions out of today's macro data. So the world is actively resetting its books for the end of the quarter. So just relax and stick to the levels we got in our tool. Also in our report, we have mentioned all this. So I mentioned global money is moving like a crazy. The Japanese yen just hit a 39-year low against the dollar, showing how powerful US interest rates are still are. And on the bright side, Wall Street tech stocks are just like logged their best quarter in almost 6 years. So while our index is like consolidating during this June 30th expiry window, the overarching global market is surprisingly strong. So you should stick to your limits, and you should look at the prices set up boundaries in your calculations. Also, the last news: the top executive at Google, Yusuf Imran, just walked away from a massive $1 million salary. So he openly admitted that he quit because he is genuinely terrified because about the rapid advertisement of artificial intelligence and what it means for long-term global job security. So when a literal tech boss walks away from $1 million because it's spoken by AI, it gets the whole trading world that talking about where technology is heading. Also, starting today, the US is releasing a massive triple threat of employment data, followed by private payrolls, concluding with the big non-farm payrolls. And also, because of the recent global distributions, the Federal Reserve is watching these job numbers like a hawk. And if the US job market shows any signs of breaking, it will force them to cut the interest rate sooner than the later. The global market is on high alert today because if this US job reports look weak, it took changes from the game for the interest rates worldwide. Also, the moving completely out of finance for a second, Germany just suffered one of the biggest, most shocking upsets in the football history. In the 2026 FIFA World Cup, yeah, Paraguay managed to drag a four times champions Germany all the way to penalty shootout and knock them out 4-3 to advance to the round of 16. So if you think the stock market is volatile today, Germany just got kicked out of the World Cup by Paraguay on penalties. So absolute madness everywhere you look today. All right, like from the $1 million Google exit to crucial US jobs data dropping this week, global sentiment is highly active. Don't let our local expiry date chop get to your head, and let the big institutional fund finish squaring off their June positions. Six to the clear level from our reports, and let's navigate the rest of this session safely. Put your doubts or comments in the comments box and chat box. We'll discuss there. We'll be back with the option chain analysis. Yeah. So we'll be back with the option chain analysis. Stay with us. So yeah, in that meantime, I just pasted our demo link. If you guys like want to contact us, you just go through that link and come back and contact us anytime.
So, hi everyone. Today we are diving deep into how to read live open interest data to understand market direction. So, we'll start with Nifty. So, before that, we'll just look into the technical chart. So, so if we look at the technical chart, the price uh, had regained the support level. It has reacted to the support level. So, price is currently trading near supply zone, which you can see was a broken demand zone. Now it will act as a supply. So we got a reaction over here. So wait for this support break so that we'll get a strong downward direction. So since today is Nifty monthly expiry, we can plan for short positions. And if we look at the higher time frames, we can if you look at the higher time frames, the trend is clearly a downtrend. So we can look for short, strong downtrend. So with this, we'll just look at the option chain. So Nifty is currently trading around 23,881, roughly down the 0.26%. So with the immediate price action looks slightly bearish. The underlying open interest data is telling a completely different, highly bullish story for the support levels. So if we first we look into the key metrics, which are PCR and max pain strike. So if we look into it, India VIX is hovering steadily at 13.70. Low volatility means option premiums aren't bloated. Market is making a smoother environment at directional plays. So max pain is sitting precisely at 23,900 with our current spot price at 23,903. We are trading right at the magnet where options writers want to pin the market. So you can see the orange line. This is where the current market is trading. So if you look at the put call ratio, the PCR is 2.227, 2.824. A PCR this high typically indicates a strong bullish bias or heavy put writing protecting lower levels. So if you look at the bars where this massive wall of protection is built, we'll just look into each strike price where the massive wall is built. So let's look at the OI chart to see where the big money is parked. So notice the current spot price of 23 903, which is marked 900, which is marked by the orange line. So right below it, look at the staggering green bars at 23,500, 23,700, 24,000. So if we look at the immediate support level, we have a strong 24, 23, yeah, 23,850 and 23,800. So we can mark those levels in chart. So 23,800, 23,850. So price has exactly reacted to this 23,850 level. 2300 is the next resistance zone, where exactly our indicator shows a strong support level, and 23,700 is the next strong support level. So if we look at the resistance side, we can see 24,300, 24,250, 24,200 has a strong resistance level. So the next support level is the 24,200 and 24,300. So what does the structure tells us is uh, so the downside seems capped by heavy institutional put writing, while the upside has room to breathe up towards 24,100 to 24,100 before hitting a major supply. So when you see a setup like this with massive 2.277, blindly shorting because the index is down by 43 points can be a trap. So notice that 24,000 has a substantial mix of both green and red striped bars. It's the classic tug of war, where the current price is trading is 24. It is currently trading at 23,900. So 24,000 has strong both put writers and call writers. But put writers is currently more than call writers, as increased by 92.75 lakhs, and call writing has increased by 67.31 lakhs. So if the index holds about 23,900 max pain and starts creeping past 23,950, those call writers 24,000 will be forced to cover their positions quickly because the underlying support at lower strike is so thick. Any dip towards 23,850 or 23,900 is technically buy on dips zones rather than a breakout sell zone. So let's talk about the execution strategy based on this data. So let's see how we can convert into a profitable trade setups. So retail traders see a candle breakout on a 5 minutes chart and short market at 23,900. But looking at the dashboard, shorting here is a low probability trade because you are selling right into a massive wall of institutional put options. So our primary strategy target is buy on dips near a structural support. So we have got a exact structural support here. Right. So this Nifty dips, we got a dip in 23,850 to 2,900 zone and stabilizes. It has stabilized by giving a bullish candlestick pattern in a 5 minutes chart. So our immediate target is push back up to 24,000. So we have a strong resistance near 24,000. You can see here. So keep an eye on the 24,000 strike right now. There are some call writers trying to fight back on the 24,000 bar. So the spot price clears 23,950. Those call writers at 24,000 will face heavy loss. So to save themselves, they will have to buy back their short positions, that short covering, and will act like a rocket fuel, driving Nifty rapidly towards 24,100 to 24,150. So always align your price action entries with this OI walls. So if you have a question that the PCR is 2.277, shouldn't we be worried that the market is overbought and might crash? So in momentum indicators like RSI, extreme high means overbought, but in option chain analysis, an extremely high PCR built during market hours means the floor is extraordinarily strong. It doesn't mean it can't pull down, but it tells you that sudden crash is highly unlikely because a big money is defending a lower strikes. So if you have another questions like how often should we look at this chart to update our view, I recommend checking it every 15 minutes to 30 minutes. So look for changes in stripes. If you suddenly see the green stripe on 23,900 bar disappearing, it means bulls are retreating that you're accused to exit long. So if you want to summarize our game plan for the rest of the day, India VIX is stable and Max Pain is acting as a baseline at 23,900. And aggressive put writing indicates a massive structural support. Look for long setups on minor intraday dips, and we need to uh, avoid aggressive shorting. So if you learned something new about reading institutional data today, make sure to smash that like button, subscribe, and turn on notification. So you need to trade smart, manage your risk rigorously. And I'll see you all in the next index analysis on Bank Nifty. So until then, let me know if you have any questions regarding this. Let me know in the comments. So the same way, we'll also analyze Bank Nifty and Sensex. And we had also given a live update at 9:30. So we told that Nifty is at support level. So after our update, Nifty has recovered 60 points. So we also have a quick update. We have a stock. So Novama stock is an uptrend. So we just had to update this on live. Let me know if you have any favorite stocks so that we can analyze it for you. Just mention your favorite stock in the comments. So if you look at this particular stock, which we mentioned a few minutes before, our software has also given a buy signal at uh, at 9:16, 9:18. So we would have gained around 0.995%, which is close to 1%. So keep eye on this particular stock. So there's still that the trend is in uptrend. So expect the price to retest So the price has broken this strong resistance level, and it has given us a retest. So it has also given us a strong engulfing candle in 3 minutes. So you can switch it to higher time frames and look for a strong buying momentum candle. So once you get that, you can go for a long positions. So now we'll just open Bank Nifty chart. So if we look at the Bank Nifty chart, we can see that. So yeah, we just wrapped up Nifty, but now we are shifting our gears to the big brother of volatility, which is called Bank Nifty. So the time is exactly 11, almost heading into afternoon session. The Bank Nifty is currently trading at 57,681, up a minor, which is down by minus 0.07%. So while Nifty gave us a highly bullish underlying structure earlier, Bank Nifty is telling a radically different, highly aggressive story. So the option writers here are setting up a massive trap. So put ready in the chart if you want to find out whether institutional walls are being built for Bank Nifty today. So just let me know comment section that you are ready for Bank Nifty analysis. Yeah. So if we look at the, I'll just share the Bank Nifty OI chart. Yeah. So if we look at the India VIX, it is trading perfectly stable at 13.71, which is up by zero point 0.1. So showing absolutely no fear and systematic volatility spikes in the overall market. So looking at the max pain, it is sitting at 57,700. So our current spot price is at 57,689. So, meaning we are trading just a tiny bit above the level where option writers would enjoy maximum profitability on expiry day. So we look at the put call ratio. So if we see the put call ratio, it is sitting at extremely low, 0.307. So let's pause and understand what this means. A PCR of 0.307 is extremely heavily deeply bearish. So it tells us that for every 30 put options writers are written to protect the downside, there are roughly 100 call options written aggressively overhead. So the sellers are building a heavy concrete ceiling above Bank Nifty head today. So we'll just analyze the OI battlefield where we'll spot the walls. So we can look at where is the exact resistance and support levels. So we look at the we look closely at the combined OI bar chart to see exactly where the big bets are placed. So this vertical orange line marks our spot price. So it is sitting at the 58,000 strike price. We look at the strike pattern on the bars. So call is increased. Yeah, no. So call has increased. So there is no change in put. So it means today intraday call writers have gone completely aggressive, piling into 58,100 call, making it nearly unbreakable resistance zone. So for the immediate session, so even lower down at 57,500 and near the spot, call options are being actively added. So if we look at the left side of the orange line, the downside support, where are the green bars? So if the only major significant green wall static is all the way down to 58,000 and 58,500. So we'll just mark these levels in the chart. So where is 57,000 is 57,500. So 57,500 and so 57,500 and 57,000. So these are the major support levels. So if we, yeah, so there's very little structural support built up when you have a massive call wall at 58,000 and completely, hollow put support down below. So it means the path of least resistance for Bank Nifty right now is technically sideways to down. So if we turn the data into an actionable trading blueprint for the next few hours, so because Bank Nifty is currently it is currently down by minus 0.08%. So we might look as a retailer, we might look at a minor 5 minute green candle and think it's going to, it has taken support or it's going to break a resistance level. But buying call options right below a massive institutional wall at 58,000 with the overall PCR of 0.305 is incredibly risky. So our primary plan should be, our core strategy for Bank Nifty today is to look for shorting opportunities or put buying on minor intraday pullbacks. So if the index ticks upward into 57,850 to 950 zone, watch your candlestick patterns like a bearish ankle candle or a shooting star. So shorting there gives you a tight stop loss just above 58,000. So with the target looking back down towards 57,600 and 57,500. So only if the 58,000 red bar begins drastically string, meaning call writers are unwinding and panicking, would we ever flip our bias to long. So if you have any questions, let me know in the comments. So you might even ask, Nifty PCR was very bullish, but Bank Nifty PCR is heavily bearish. Bearish. How do we trade this divergence? So this is a classic divergent market. So what this happens is it usually means the market will remain sideways and choppy because Nifty sectors are holding it up while banking stocks are dragging it down. The best approach is to avoid trading index to index correlations today. So trade Nifty for longs on dips and trade Bank Nifty strictly for short near resistance. So what if someone asks what if Bank Nifty breaks 57,500? So if you look at the green bars below, it could trigger a fast cascade down towards 57 to 200 or 100 because there is no immediate cushion built by option sellers. So to summarize, Bank Nifty for the afternoon, 58,000 is our ultimate line in the sandal as a major ceiling. So PCR is deeply bearish at 0.305. So respect the call raters, look for short pullbacks and manage your positions sizing strictly. So let me know if you have any questions related to Bank Nifty. Someone has asked, sir, is there possible to hit Nifty third target? Since price is currently near the support level, so it is giving you a strong buying pressure here. So just wait for the break. If you see a candlestick breaking above this, then there's a high possibility of going till the third target. So we'll be back with Sensex option chain analysis. Today Nifty break 24,000. Since it has opened reclaiming the 24,000 level, so it's 24,000 acted as a psychological level. So it had opened above it. So it means this was a strong liquidity correction. So there's a high possibility of Nifty reclaiming 24,000 level as well. So we also saw that option chain showed us high PCR, high bullish bias PCR about 2.23. Still India stocks. Yeah, I'll just. So yeah, the stock is currently in uptrend. So we can see that there is a trend line break in a 1 hour time frame, and we can see there is a strong candle close above this resistance as a support level, the resistance level. So the stock is currently in uptrend. So you can look for long positions in any retracements or pullback. So we'll be back in another 5 minutes, discussing about the Sensex index and its option analysis. So I hope it's clear regarding Nifty. Will Nifty break about 24,000, and is there possibility to hit Nifty third target? So I hope we got answer for these questions and the particular stock you asked as well. So yeah, we'll be back in another 5 minutes regarding Sensex index and its option chain analysis. So we'll just look at the Sensex index right now. So it's currently 11:21, and the Sensex is trading at 76,731. So which is down, which is up by 25, 23 points. So we are witnessing an absolute flat line in terms of pure price action. But beneath this calm surface, option writers are actively placing enormous direction walls. So if you are ready to master how to read the sideways market structure and catch the next breakout leg, so drop an OI in live chart right now. So if we zoom into, or we'll just look at the OI chart. So if we zoom into the left informational strip pointing to India VIX and Max Pain and PCR. So India VIX is currently at 3.47, cooling off slightly by 0.15 points. There's a zero macro panic or volatility explosion in the market right now. So this tells us the option premiums are regular and moving entirely on structural demand and supply. So if you look at the max pain, which is pinned at 76,700, where is our current spot price is at 76,707. So our current PCR is 0.641. Remember, a PCR under zero point 0.7 leans clearly bearish to neutral. So it signifies that call sellers outnumbered put sellers, creating a cap on immediate upward expansion. So let's dissect the bar chart below to look at where the pressure is heaviest. So we'll look into 76,500 and a massive red bar at 77,000. So if you look right off the spot line, look at the absolute skyscraper of a red bar at 77,000 and look those massive dense red stripes on the top. So that's a huge surge in call increase. Option writers are relentlessly dumping at 77,000 call today. So constructing a massive concrete roof over the index. So we also see active intraday call addition at 76,800. So and 76,900 as well. So the immediate structural boundaries are strictly locked into 76 500. 76 500 is the floor and 77,000 is the ceiling. So because the call writing over it's far more aggressive, the market is facing constant downward friction on any attempt to rise beyond 77,000. So we'll just look into the technical chart as well. So since the current target, so current price reached the support level, and it started to break this support. So you can look for the price to reach near 76, 874. So if we had to create a trading strategy using this, with the index flat at negative 21 points, do not attempt to buy vanilla options out of money expecting a massive trendy breakout right now. So you will likely lose premium to time decay because of the dense walls around the spot. So if the index slips down towards 76,500 or 76,550 zone, look for a long conforming candle. This is where you can buy and close to money call or short put, targeting the bounce back to 76,500. So if the index rallies into the 76,850, 76,950 region, it's a prime sell on rise zone. So the massive 7,700 call wall makes it incredibly hard break past on the first try. So look for a bearish price action. So look for a bearish price action trigger to short the index or buy puts targeting a right back down towards 76,700. So before we continue this, we had also given an update regarding Nifty and Nuvama stock. So Nifty raised 120 points. So it recovered 120 points after update. So we had given a update that the price might take a support and it might rise. So it had 120 points was recovered from our mentioned zone. So we'll just look at Novama as well. Yeah. So price, we had also told that price had exactly taken the support level. So there's a strong price to go uptrend. So we saw a 10 points jump from this zone. So we had got around 15 points after update. So continuing to Sensex option chain. If someone asks what does the PCR of 0.641 mean for the rest of the day, so it means the bears are holding the upper hand at the resistance, and it tells us that any random upward spike will likely face selling pressure until the PCR crawls back above 0.90 or 1. So don't chase the green candles blindly today. So max pain is at 76,700 and spot is at 76,707. So it is wise to trade a straddle here. So since the market is completely glued to its max pain level and trapped between strong OI walls, delta neutral option strategies like short straddle or short strangle right around 76,700 are making great DK money for option sellers today. So we are trapped in a clear 76,500 to 77,000 zone. So treat the extremes as your reversal points. Keep your risk small and avoid over trading the middle chop. So this is about Sensex. We have discussed all the index and option chain analysis. So Thanks for joining this index analysis today. So smash the subscribe button, give this a stream a thumbs up, and see. We'll be discussing about the stocks to look today based on OI, and also we'll be discussing about the heat maps as well. So until then, stay tuned and let me know if you have any doubts related to index. Put it in the comment section so that we'll answer all your questions. So yeah, let me know in the comments if you have any doubts related to the index option chain analysis, and let me know your view on the index as well. So which position are you planning to take?
Hi guys. So yeah guys, as we told, here we are with the open interest. We'll go stock by stock, which has gained open interest. So as I told, today is the monthly expiry, and the open interest data on the screen is actually honestly one of the most aggressive build I have seen in the world. So as I told, we'll be going stock by stock, full detailed breakdown here. So let's go with the bank nifty. Yeah, it has jumped from 18.79 lakh contracts yesterday to 26.87 lakh today. So that's a jump of over 8 lakhs contracts, 43% change, which is actually massive. And value also exploded with 2.25 crore contracts traded. So future value alone is 3,490 crore, and total value including options crossed 10,450 crore. Underlying is sitting at 57,746. So you should remember that today is expiry day, and so part of this is just a, natural rollover into the July series. So, but 43% jump is still aggressive. Traders are clearly building big fresh positions, not just rolling old ones. So this tells me conditions is highly heading into next month, likely on the back of the banking rally. So the next one is Nifty, which OI is from 97.8 lakh to 137.9 lakh, a jump of 14 lakh contracts, 41% change. Value is enormous with 13.8 crore contracts, and future value is 13,575 crore. Option premium value is 33,227 crore. Total value of 46,800 crore, almost half of a lakh crore rupees of activity in Nifty derivatives only today. So underlying at 23,934. So this is your actual broad market sentiment gauge. So with why this heavy and price holding above 23,900, it tells you positioning is constructive. We had that scare on 23rd June with a Cosby crash and Accenture led IT weakness. But the recovery from 24th onwards, RBI's dovish tone, falling crude, FI buying, India US trade, deal optimism clearly built confidence back. Yeah, the next one is FinNifty. OI up to 35% from 51,334 to 69,221 contracts. Smaller index but still a healthy build. Futures value of 2,290 crore. Options are 18,400 crore. Currently underlying is 26,626. So Finifty is your financial service basket, banks, NBFCs, insurance. This tracks almost exactly with the Bank Nifty story. So rate cut hope is the dominant driver of pulling money into this space. So yeah, the next one is mid cap Nifty with the OI buildup of 29%, from 1.97 lakhs to 2.55 lakhs new contracts. Underlying is 14,429. Future value is 65,388 crore. that looks highly related to lot size, but that's because mid cap features carry biggest national value per lot. And you should point out the point here, which is mid caps participating heavily in this tally tells you it's not just the large cap led. Broad market breadth is healthy, which is usually a good sign for sustainability of the up move. So yeah, the next one is Nifty Next 50 with the OI build-up of 23.5% from 2,561 to 3,164, which new contracts are added. And it's a small base, smaller absolute numbers, but underlying at 71,651. This index represents the next rung of large caps. Study positioning here, nothing dramatic, just tagging along with the broader rally. So yeah, the next one is HR is your Royal Enfield story. Falling crude oil helps input cost, and we are heading into auto sales. Traders are clearly building positions ahead of the data, and you should keep this on your watch list. RE value numbers when they drop could move this stock sharply. It also build up open interest of 16%. Yeah, the next one is Maruti Suzuki, with the open interest of 12% from 1.69 lakhs to 1.89 lakhs. Future value of 1 lakh 64,853. Biggest futures value on this list after the indices, like underlying at 14,026. So Maruti is the largest passenger vehicle player. So this OI build reflects broader confidence in autonomous recovery, falling crude, decent monsoons, diesel demands, like all positive for those two-wheeler and passenger vehicle balance. The next one is Nestle India with the open interest up to 9.87 from 39,956 to 43,900. Futures value is 56,791 lakhs. Underlying is 1,415. So, FMCG defensive name, classic monsoon and rural recovery trade. Also, keep an eye on the input cost, palm oil, packaging, dairy prices. Any softening this directly helps margin for next name like Nestle. The next one is VBL, Varun Beverages, with the open interest up to 9% from 74,497 to 81,000 to 40. Underlying just 505, which is actually interesting. The stock had a split, lower price point, so very retail friendly now. Feature value of 66,089 lakhs. Summer season plus monsoon trade, beverages demand typically strong this time of like year. Traders positioning for seasonal tailwind. Yeah, the next one is Federal Bank with open interest of 7.26 from 59,235 to 63,534. Underlying is the 29, which are mid-sized private banks, very popular trading counters, riding the broader banking sector rally and rate cutout. Watch for their quarterly numbers and any RBI policy commentary. So the stocks reacts fast to that rates sentiment. Yeah, the next one is Tata Consumer Products, which open interest is 6.7% from 46,509 to 49,640. Underlying is 1,083. So FMCG basket again, tea, coffee, packaged products, same monsoon rural demand narrative as Nestle and Britannia. Worth noticing the stock as M&A and product expansion news flow. So always check recent company announcements too. You should keep your eye on that too. Yeah, DLF. We'll talk about the DLF. It has increased OI up to 6.42% from 80,941 to 86,135. Underlying is 619. Classic rate sensitive stock. The moment the market start pricing in rates cuts or even a pause, really re-rates because lower borrowing costs help both developer margins and home buyer also affordability. Yeah, the next one is Tata Power with OI buildup of 5.28% from 85,499 to 90,011. Underlying price of 385. So power and renewable energy theme, India's power capex and green energy push is a multi-year story, and Tata Power sits right at the center of it, and solar, renewables, and other distributions. You know, Indian Oil Corporation, which is a high of 5.27% of open interest from 52,455 to 55,219. Underlying is 139. Directly benefits from falling crude oil prices since lower input costs typically mean better marketing margins for OMCs. Shouldn't forget the Infosys, which is OI up to 4.91% from 6.61 lakh to 6.46 lakh, underlying of 1,009 rupees. Future value is 2 lakh 95,162 lakhs. Big number, heavy IT weights. Actually, this is the most interesting one day. Remember, IT was the weak spot this whole week, and Accenture's cautious global outlook on the 23rd hit the entire IT pack. So, this is OI build in Infosys isn't just pure bullish conviction. It's a mix of hedging, bottom fishing, and also repositioning after the scare. Definitely the name to watch closely after the next, like over the next few sessions to see which way it goes or which way it breaks. As I mentioned, the Britannia Industries, which is a open interest buildup of 4.85% from 38,000 to 38,499 to 40,368. One of the highest price stocks on this list, underlying of 5,142. Again, the same FMCG, monsoon, rural demand, like which is that theme trying together with Nestle and Tata Consumer. Yeah, in banking, S Bank, it has open interest up to 4.27% of 70,005 to 72,996. Underlying just at 24 rupees, super retail friendly price point. So, very high volume counter with 23,590 contracts traded only today. Pure banking sector beta play, lots of retail participation given the low price. And Bharat Electronics OI up to 4.26% with 1.56 lakhs to 1.62 lakhs, underlying of 411. These names typically move on order flow announcements and defense budget news. So no specific confirmed trigger in today's data. So no worth tracking any fresh defense order with separately. So yeah, this is the open interest buildup of each and every stock. So today's massive OI buildup is partially natural expiry day rollover, but the underlying sentiment is clearly bullish. Banking and financial leadings, Federal Bank, S Bank, Geofinance, IOC, and autos riding falling crude. Maruti, yeah, FMCG on monsoon soap, NSL, PBL, Tata Consumer, Britannia. So yeah, going into July series, keep your eye on RBI commentary, crude oil direction, and FII flows, and how the India-US trade deals developers. It's all decide the next coming leg. So yeah, again we'll be coming up with the heat map, which are the stocks which are outperforming and which and all the stocks underperforming by the sectorial wise. Which are the sectors are performing good and which and all sectors are underperforming. We'll be back with that news. We'll be back with that data, with updated data, and be with us if you have any doubts regarding the stocks which I took here in the live. Let me know in the comments. So yeah, guys, we have a quick update here. We have mentioned here that we have already mentioned here. We have updated here that it will go up, and it has went up by 20 points. Also, our system also generated a buy signal here. You can see. So, hi guys. As I was mentioning about the heat maps and the stocks which are outperforming and underperforming. So, we can look at the data, the headline index. So, Nifty Bank is sitting there at 57,728, literally a 0% change. It is actually completely frozen, but under the hood, massive institutional money is fleeing certain agency. So we are going to deep dive into index by index, stock by stock. I'm going to isolate the top three absolute market leaders that are completely outperforming, and the bottom three sectors that are facing an absolute liquidation crisis. For every single one of these six sectors, we are going to look at exactly three proxy stocks to show you precisely where the smart money is hiding, and also where the traps are being laid. So first we'll talk about the outperformers. One is Nifty Chemicals. So let's start with the undisputed king of the morning session, Nifty Chemicals, with 1.25% gain, index of 29,565.85, which is actually leading the entire NSD board up a spectacular 1.25%, sitting comfortably at 29,565.85 the last 18 months. So the sector has been treated like paria because of massive Chinese dumping and brutal raw material margin. Also, it's compression. But look at the clear screen today. You can just check out these stocks which comes out of Nifty Chemicals. The cyclical turnaround is actually official here, and the derivatives desk is printing massive long build-up contracts. So let's just take some top three structural drivers moving the top of this stock. One is SRF. It's leading the charge today, and institutional volume on the cash desk is tracking at 2.85 times this 20-day moving average. What's driving this is the packaging film business has finally hit us cyclical floor, and specialty chemical margins for their agrochemical supply are bouncing back. So technically, it's steering through its 200-day exponential moving average on the daily chart. If this candle close above the line on today on expiry, the short covering the rally into the July series is going to be actually explosive. So the next one is Pidilite Industries. This isn't just a chemical play; it's a proxy for all the entire domestic construction boom. While industrial chemicals are volatile, Pidilite's consumer-facing business, your classic Fevicol and Dr. Fixit clients, maintains a massive pricing power. What I'm seeing on the option chain right now is heavily liquidation for out of the money call options, meaning the resistance level are shifting higher, and it's pretty steady, compounding chart showing zero expiry volatility. And the next one is Anupam Rasa in India. Now, if you want high beta alpha, look at the Anupam Rasa. This stock is experiencing a classic textbook short squeeze today. Open interest dropped by 6% in the morning session, while the stock price scaled higher, which means weak shorts are getting completely run over. Their recent long term supply contracts with the European majors are giving the market massive multi year visibility. So keep this on your terminal. If it holds today's opening gap, the momentum is actually structural. The next one is Nifty Realty, the sector. Right on the heels of the chemical sector is Nifty Real. Absolute tearing it up with a 1.24% in the gain, trading at 829.00. So, guys, the real estate story in India isn't just a trade anymore. It's structural multi-year bull run. The market is firmly pricing in peak domestic interest, and the inventory drawdown numbers coming out of the top tier metros like Mumbai, Bangalore, also NCR, are completely out of this world. Let's look at how big boys are like positioning themselves. One is DLF. It's acting like absolute locomotive. It's pushing right back towards its multi-year heights. So the company's luxury housing lenses are selling out within literal hours of opening. On the derivatives front, we are seeing fresh long positions being rolled over into the June series, my bad, July series, the next month of 82% rollover rate. And the Godrej properties showcasing a incredibly aggressive setup today. They just announced another massive land parcel in the MMR region, and the cash flows look stellar. Look at the option change, the immediate resistance at the monthly round number has been completely obliterated. The aggregate open interest is up to 9.5%, confirming that large scale momentum players are chasing its stock right now. And the third one is Nifty consumer durables. The third pillar of outperformance today is Nifty consumer durables, jumping a solid 1.17% to hit 36,447.40. This is a double whammy play. First, you have the immediate seasonal kicker with the extended summer heat waves, driving unprecedented cooling products in sale. Second one, because real estate is booming, every single new apartment needs premium wires, switches, lightning, and some kitchen appliances. So capital is rotating into its high visibility space art. And Havels India, which comes under Nifty Consumers, it's leading the charge, and the reasons are crystal clear. The industrial switch gear and core capable divisions are operating at near optimum capacity. Simultaneously, their Lord Consumer division is seeing a massive margin expansion as raw material input stabilize. The stock is seeing steady delivery based buying on the cash segment today, and not just speculative futures trade. And the Voltas, let's talk about the undisputed king of the air conditioning, which is Voltas. The market is aggressively front running their upcoming quarterly earning because channel changes checks indicate their secondary market virtually zero. So everything is flying off the shelf. On the charts, Voltas has performed and formed a massive consolidation breakouts pattern. The open interest bill today is clocking in at an 8%, which is increase and indicating high conviction long positioning, 3rd of July. And the Titan, now Titan is the heavyweight anchor of this index. Even a minor 1% move in a Titan provides a massive structural discretionary consumer holding up incredibly well. So technically, Titan is bouncing right off its crucial 100-day moving average on heavy institutional accumulation blocks. It's the ultimate defensive growth stock when the market gets volatile. So if you guys are buying any structural real estate suppliers like Havels or betting purely on a seasonal names like Voltas, let me see your picks in the comments. Yeah, we'll talk about the underperformance now. One is Nifty IT. Let's flip the coin and talk about the way the bleeding is getting downright dangerous. Nifty IT is collapsing today, down an absolute massive of 2.14%. plunging deep at 26,460.85. This isn't just intraday noise. The index has broken its multiple month support to its lowest level nearly in 3 years. And the trigger, global macro jitters are compounding after Accenture's highly cautionary forward guidance. And institutional investors are completely deallocating from traditional Indian IT outsourcing. Let's look at the damage what they have created. One is Tata Consultancy Services, it's TCS, the absolute crown jewel of the Indian IT. It has breached its critical psychological support floor today, tumbling to a fresh 52-week low when the biggest player in the sector cracks its high value, it signals a structural shift. The issues isn't deal wins. TCS is signing the deals, and the issue is the total lack of discretionary spending. Clients are holding cash, and the building milestones are getting delayed. Our trying to time the bottom here, and the second one is Infosys in IT. It's seeing a massive, aggressive, and short build-up today. Open interest has surged by nearly 5%, but the price is down in a straight line. That is a textbook definition of institutional short sellers driving the tape. So retail traders have been constantly trying to bottom fish Infosys for a week, and today's expiry price action is a massive, which is a trap that is completely flushing them out. The near-term trend remains firmly bearish until the macro landscape shifts. Yeah, the next one is LTI Mind Tree. If the large caps are building, the high beta mid to large cap names like LTI Mind Tree are getting completely slaughtered, and it also registered a fresh 52-week low this morning. And because LTI Mind Tree has a higher exposure to discretionary digital transformation and some projects. It gets it twice as hard when global corporation cuts back on their tech budgets. The stock is trading well below its the stock is trading well below its short and long term moving averages. Do not step into or in front of this freight train. So how many people are thinking to take a position in TCS or Infosys or any, or waiting or holding or thinking of taking? Let me know in that. And second one is Nifty FMCG, who's underperforming, sliding nearly 0.75% down to 48,780.35. Now, why is FMCG falling when the broader market sentiment is constructive? Yeah, this is a classic case of opportunity cost allocation. Institutional desks are actively selling out of slow moving defensive sectors like FMCG to free up the liquid cash required to fund their aggressive long positions in the fast moving cyclical structures like chemicals and realty. Let's look at the core components in FMCG. One is Hindustan Unilever, HUL. It's showing remarkably sluggish price action. The much anticipated rural value recovery is turning out to be incredibly slow and erratic. So on top of that, raw materials inputs prices, especially palm oil and chemical derivatives for derivative products, are creeping back up. Actually, is facing a dual crunch, stagnant volume growth and compressed operating margins. The stock is completely dead money on the daily charts. So yeah, the second one is ITC Limited. It is experiencing highly institutional profit booking today. And yeah, you should remember that ITC has been a massive outperformer over the last year, but making it the perfect funder counter. When a fund manager needs quick cash to buy into a breaking out chemical stock, they prune their allocation into highly liquid, stable names like ITC. So there is nothing fundamentally broken with the business, but the short-term capital flow dynamics are working against it. And the Britannia is trading near down 1% today. The premium bakery and the biscuit segment is facing severe competitive pressures from regional agile players. Furthermore, also the agriculture raw materials costs like wheat, dairy, sugar, capping any immediate margin expansion potentials. So the option change shows heavy writing at the current strike price, which already mentioned by Harish. So creating a tight overrated ceiling for the July upcoming series. So FMCG is acting like a market's piggy bank today. So if you guys are using this dip to accumulate stable dividend players like ITC, or are you just completely focused on growth stocks right now? So yeah, the next one in underperformer is Nifty Media, rounding out the underperformers list. So down by 0.31%, 31% at 1485.20, while the absolute percentage drops look smaller compared to IT. So make no mistake, this is a sector plagued by deep structural weakness on a massive derivative expiry. Days like today, institutional trading has completely ignored the media space due to the lack of deep liquidity, leaving it to the drift floor on a retail apathy. So let's look at the retailers' realities of the individual counters in media. One is the entertainment. It's a completely stuck in long-term structural downtrend. The charts are showing a series of lower highs and lower lows that have persisted for months without a clear, definitive corporate catalyst or a structural cleanup of the balance sheet. Domestic institutions refuse to touch this down. So the value today is purely speculative, intraday touching. Stay away from the noise here in the Z Entertainment and the Sun TV network. So it has significantly better managed and holds on much stronger cash balance. So but it suffers from severe macro sector track. There is absolute zero institutional value support on the counter today. So when an index lacks structural fund inflows, every even fundamental sounds names like Sun TV simply end up drifting sideways to lowers, matching the broader sectorial inertia. And the last one who's underperforming is PVR Inox Limited. And yeah, finally, PVR Inox, the multiplex business model is undergoing a massive, painful structural evaluation. Foot, uh, Footfalls and box office collections for mainstream theatrical reasons remain highly volatile and completely unpredictable. So, meanwhile, fixed operating overheads and intensifying competitions from global OTT streaming platforms are severely capping long-term return on equity. So the stock price today accurately reflects this persistent structural stress. So let's just pull these pieces together, because all the map we just drew across these six sectors gives us the perfect playbook for the upcoming July derivatives. So the institutional trend is shouting at us in plain English. This market is completely discarding legacy, global facing IT names, and slow moving defensives, and also aggressive rotating capitals into high growth and high conviction domestic cycles. The money flow into specialty chemicals and structural real estate, also core manufacturing and consumer durables is real, heavy, and backed by long-term institutional delivery. So my advice to you going into next month is do not make the classic amateur mistake by buying an stock just because it has crashed 30% and looks cheap. So legacy IT is stuck in a multi-year structural transition phase. Instead, look at the align your capital with the sectors where the operating margins are expanding and the derivatives open interest is building. So ride the wave in chemicals and realty, and let IT find the actual structure for first. We are going to wrap up this live stream here in this news. So we'll be updating the midday market news if we get the on users. Yeah, that's the important news for today, and we'll be back with the updated news. So let me in that meantime, let me just know in the comment section if you have any doubts or if you have any curious questions about the particular stocks. Let me know in the comments. We'll analyze that in that meantime, and we will be back in the with the new updates. And that's the news which has impacted and which are ongoing news which are impacting the market right now. So before taking any trade, just look at the news and decide.
Hi everyone, welcome back. So, if you thought the equity markets were volatile today, you haven't seen anything yet. So, pull up your chairs and grab a pen because today is June 30th, 2026, the massive monthly derivative expiry day and the final session of quarter two. And the commodity boards are undergoing an absolute macroeconomic earthquake. So, look at the screens right now. I'll just change the chart. So before that, I'll just touch upon the Nifty index charts. So we could see that there was a strong resistance break in this Nifty chart. We saw a strong resistance break and prices heading towards the next resistance. So we got a perfect structure shift here. So there's high chances of retesting in any of these zones, and it might move downwards. So we'll just look into the commodity updates now. So we are witnessing an unprecedented structural divergence in commodity market. So on one side, precious metals are facing an absolute liquidation crisis, with gold pacing for its steepest monthly decline since October 2008. On the flip side, energy markets are staggering a brutal volatile tug of war as physical supply deficit collide head-on with the massive unwinding of geopolitical risk premium. So the institutional money flow today is clear. Funds are aggressively squaring their books for quarter end, there is and there is a squaring up position ahead of massive US data drops this week, including the Chicago PMI, ADP employment, and highly anticipated non-farm payrolls. Today we are going completely crystal clear deep dive. So no generic in here. So we are breaking down the exact number, the critical support, resistance structures, and raw institutional catalyst driving precious metallized energy and base metals. So drop a ready in the live chat right now if you're logged in, and let me know, are you holding on to your gold longs? Are you shorting this market down to the core? Let's unlock the data. So we'll just look into gold first. Yeah. So looking at the gold, we see gold technicals here. Sorry, just a minute. So if you look at the spot gold has aggressively broken down below the critical psychological floor of 4,000 per ounce, trading down 0.80%. So today, $3,985.57 on the domestic front. MCX 24 carat gold has collapsed by a staggering 110 per 10 grams, sitting at 1,041,440. So it is an absolute bloodbath for late bulls. So why is the ultimate safe haven completely getting dumped? Because of de-escalation and interest rate. So the massive geopolitical premium that drove gold to historic highs earlier this year has completely evaporated amid sudden progress in US-Iran diplomatic talks in Doha. So simultaneously, sticky core inflation yield when yield stays high and dollar strengthens, non-yielding gold becomes an incredible expensive asset to hold. So simultaneously, sticky core inflations from earlier energy shocks has forced the market to price in higher for longer US interest rate. So the US dollar index is marching towards its second consecutive monthly gain. When yields stay high and the dollar strengthens, non-yielding gold becomes an incredible expensive asset to hold. So yeah, simultaneously, if we look at the fundamentals, we can see sticky core inflation from earlier energy shocks has forced the market to price in higher for longer US interest rates, and the US dollar index is marching towards its second consecutive monthly gain. So when yields stay high and dollar strengthens, non-yielding gold becomes incredibly expensive asset to hold. So institutional fund desks are dumping gold to free up liquidity. So the technical levels is on the daily chart. The gold has chalked up its fourth consecutive monthly loss, down an eye-watering 12.1% in June 2026 alone. And this is the most uh, loss, which is its worst monthly performance in nearly 18 years, basically. So keep your eyes locked onto 1,41,500 on MCX and $3,093 on spot. So if those floors crack before the US payroll print, then the next structural stop all the way down to a 7 month low. There's a possibility. So and overhead resistance is any relief rally will face immediate aggressive selling pressure at 1,43,500. So if gold is bleeding, silver is an absolute state of free fall. So in the physical retail market today, silver prices collapsed by a jaw-dropping 5,000 to 2.35 lakhs per kg across major metro cities like Mumbai and Delhi. So we will now look at the crude oil futures. So crude oil is presenting a phenomenal, highly divergent setup. While precious metal are deep in red, WTI crude jumped 2.2% to 70.75 per barrel, dragging MCX crude futures up to 6,728 per barrel after testing a rock solid demand zone near 6,570 to 6,635. So this is a massive battle between the sentiment and physical reality. Uh, geopolitical Geopolitically, the market has called an end to the active conflict premium due to US-Iran standstill. However, the physical market is tightening brutally.
So yeah, guys, that's it for today. We'll be back tomorrow with the new updates. So we'll be back tomorrow with the pre-market news and also the other news, also today's post-market news. So keep your eye on the updated news today. So yeah, that's it for today. Have a good day. Thank you so much for attending the session. Tomorrow at the same time at 9:15, attend the session and be with us. Thank you so much. Have a good day.